Hello, 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 and welcome back to another week of your Mortgage Market Movers Weekly, where we will detail everything that's been going on in the financial markets that may impact the thing on everybody's mind, the mortgage interest rates. So let's just cut straight to the point. As of last week, I believe on Thursday, the 30-year average mortgage rate has increased by 2 basis points, bringing that to an average of 6.67. All right. So we have seen a pattern of about 2 basis points a week. Rates have been climbing up. Now, just because they've been climbing up, this is about 6 basis points over 3 weeks. That does not mean that rates are going up, and up, out of control. All right. We will discuss some of the factors that went into why rates might be climbing up. We will talk about the big FOMC meeting, what Jerome Powell had to say, and why he may be one of the most important people in the financial markets. All right. So stay tuned and let's get to the chart. At the charts. So again, here at the US 10-year, it does look like rates have been climbing up. Now, it's not significant. Like I said, we've climbed about 6 basis points in about 3 weeks. And I am recording this Monday at 9. This should come out a little bit later today or tomorrow. But as of Monday, it looks like the US 10-year is climbing up a little bit higher. And this is because the stock market has been rallying and the bond market is taking a little bit of a dip. So this blue line, of course, is the bond market. Again, just to reiterate, if this is your first time, the US 10-year is our proxy for mortgage interest rates. It is not the interest rate, but it is a proxy to see if rates are coming up or down. And the bond market is inversely correlated. When bonds are down, 10-year is going to be up and vice versa. So we can see that the bond market had been on a rally for a little bit and starting to come down just a hair. Now, we'll get into why a little bit later, but just know that the stock market has been, there was a rally on Friday at the end of the day, and it looks like investors were probably taking out money from the bond market and throwing it into equities, which are riskier assets, and that is what is pushing this 10-year up a little bit. All right. So let's see, what did we have last week? So this is a pretty interesting thing to check out, is retail sales. This just lets you know, are consumers still purchasing goods, and at what rate are they? So previously, this is month over month. Core just takes out automobile sales. I believe we actually went over this, but just to reiterate, retail sales are up month over month. And then when you add those automobile, still up month over month. Last time we had negative 1.2% for month over month. So for the month of February, it looks like people were buying things. Okay. We also had building permits and housing starts. Again, I think that we already went over this, so I'm not really going to reiterate, but it looks like new buildings, number of new residential buildings that began construction. So houses are being built. We did not go over this, and this is a good thing to look at, is the existing home sales. So we had been talking about how the inventory had been sitting for a little bit longer and maybe home sales were a little bit of a standstill. But this number, this is month over month, and homes are being sold. So it looks like people are, excited about the lower mortgage interest rates, and maybe a little bit of fear is subsiding about the economy, and people are buying homes. So 4.26 million as opposed to 4.09 million in the previous month. And there was an expected 3.95, so it was expected to come down, and it actually came up a good bit. So it beat expectations quite a bit. So good news. Unemployment claims a little bit higher from the previous months, but still did not beat the expectation, so that's good. Now, the main event of last week was Wednesday, and it was the FOMC meeting. Now, we had Powell, Chairman Jerome Powell, who gave a press conference at 2:30, and that sent the stock market up a little bit. I mean, it wasn't this huge rally, but it did climb up a little bit. And one of the things that Jerome Powell mentioned a good bit was the uncertainty of the economy moving forward, right? I believe he mentioned that like around 12 times. That's what I've seen anyway. I did not count in the transcript, but I've heard it was around 12 times, which is kind of a big deal. Uncertainty is not really great for the market, and I think that I think that the market probably rallied because there were no talks of a rate hike, and Jerome Powell was actually fairly dovish. He was optimistic, but also I would say cautiously optimistic about the economy. He wasn't saying, like we are definitely heading into a recession or anything like that, which, the recession talk has been on a lot of people's minds. So I think he probably squashed some fears, but definitely mentioned the uncertainty of the market. Now, if you look at the likelihood of the federal funds rate getting cut, so interest rate cuts, it looks like we are expecting 3 for the 2025 year. This jumped up from, it's been going back and forth between 3 and 2, but it is back up to 3. So markets rallied a little bit. It wasn't this crazy rally, but they did rally a little bit. Okay. Let's see. So this upcoming week, PMI is interesting data, and it is looking at manufacturing. So that's a thing to keep an eye on. And really we want to be over 50 for both of these. So anything lower than 50, that is coming out today at 9:45. Anything lower than 50 is not going to be great for the market. Looks like Trump is speaking tentatively today at some point. And we have new home sales, which this will be important information, of course, for the real estate market. So we are going to see our new homes also being sold. These are new single-family homes from the previous month. So is this number going up too? So we already saw existing home sales, which were non-new construction homes, and those numbers were going up. Are people also buying new construction homes? So we will see that Tuesday at the 10 a.m. time frame Eastern Standard. Final GDP. This is, pretty important. GDP is how we measure economic health, really. And I believe the Atlanta Fed was predicting a contraction for 2025, which really worried people for sure. And it's a prediction, so that's something to keep in mind, but it's good to have actual numbers. And of course, this is just GDP for quarter over quarter. But moving forward, I think that recession fears have not been completely squashed, but I think that people are a little bit more optimistic than they were. We also have unemployment claims on Thursday. Pending home sales month over month Thursday. PCE is that's pretty important, and PCE is the preferred method of measuring inflation from the Fed. So we want to see, is this number ticking up or not? Personal spending will also be important for just looking at recession fears. Are people still spending money as much as they have been? Consumer sentiment. This is survey data, so it does impact the market, but these are surveys, right? So it's really just people's expectations moving forward of inflation and just the overall economy. Alrighty, going over to the chart for the 30-year fixed. like I said, we've been creeping up about 6 basis points since March 6th. So the average 30-year is 6.67. It's so incredibly hard to try to time the bottom. People are going to say, are the rates going down? Are they going to keep going down? And it's like, they can, of course, and we can look at the data and we can make educated guesses. But at the end of the day, this is all based off probability. Nothing is certain. So, if you have Joe Schmo down the street saying, oh, yeah, rates are going down, they have to go down, or they have to go up, they don't have to do anything. This is impacted by financial markets and conditions that really can spring up at any moment, right? We could get one tweet from Trump, and that could send the stock market in a down spiral, which conversely could boost the bond market, which would bring rates down theoretically. But we might not get that tweet. So it really just depends. I know like April 2nd, it was supposed to be a lot of tariffs going in place. And part of the reason that we are getting a little rally on Monday morning today is because I think that that's been backtracked a little bit. And I don't think as many tariffs are actually getting put in place on April 2nd. So, it's really up in the air. And we have to take these things week by week, day by day even. Big fluctuations can happen in the middle of the day, and rates can get adjusted in the middle of the day. Let's see. Yeah, I mean, we've talked about how we have to wait for the next quarter in sale price. I think the audio might be cutting in and out, so if it's choppy, my apologies. Having technical difficulties, but really we can cut it there. All right, so again, let's take this week by week. Let's not jump the gun and say rates have to go down, rates have to go up. And I will be informing you week by week what is going on in the financial markets and what may be impacting that. All right. So if you have any questions, if you feel like you would like more emphasis on a certain aspect of the market, be sure to let us know in the comments below. If you'd like to look into purchasing a home, reach out to us on www.mortgagesbylinda.com. We have an handy dandy apply button right here. Very easy online application. If you prefer to call us, give us a call at 877-TEAM-MBL. All right, everyone, have a great week.